Welcome back to Midcap Radar. Well, the sell-off has intensified, but we have a special management. Amit Kumar Sinha, MD and CEO at Mahindra Lifespace Developers, joins us now. Good afternoon, sir. Thank you so much for joining us. Mr. Sinha, first up, give us a sense of why exactly you're going ahead and doing this fundraise, close to 1,500 crore via the rights issue. What will be the total equity dilution? What will the funds be used for? What is the total debt? And if you're using it to reduce debt, what will be the debt post-reduction?
Yeah, thank you for having me. You have multiple questions. So
Right.
we had planned to scale our business. In our previous discussion, we talked about that we're trying to grow our business significantly faster than what we have done in the past. Our aspiration is 5x in 5 years. So that requires funds. And as you know, Mahindra Lifespaces has been designated as a growth gem for Mahindra and Mahindra Group. So this is in the same direction that we need funding to support our growth aspiration. The funds will actually be used partly to pare down the debt for the time being, because we'll not use all the funds immediately. We'll use it over a period of time. And also for our land GDV accumulation. We have done a tremendously aggressive job in the last 11 months of this financial year, reaching almost 18,000 crore of GDV acquisition already. So we want to maintain that growth momentum, but in a very, very prudent, financially accretive way. So this rights issue allows us to pare down the debt in the short term, but also allow us to fund for the growth capital. Our operating cash flows are healthy, so they will also continue to contribute to that. Your second question was, I can answer the equity question.
Yeah, it was on debt, which you answered that, yes.
Mr. Sinha, good afternoon. You mentioned you want to use part of those proceeds to pare down your debt, but the primary intention is to continue, you need funding for growth. If you could share with us the mix as to how much percentage of that fundraise do you plan to use for growth and to pare down debt as well?
So right now, I would put this around 50-50, right? Because we are not going to use all the funds immediately to put into land or GDV. So I put down, reduce, we have roughly 1,300 crore of debt. We'll not touch the short-term debt, but the long-term debt on the residential side, we'll try to use most of it and pare down the debt. But I think and the remaining is available as a dry powder for us to use for GDV acquisition, but prudent GDV acquisition, not just, hey, we have funds, let's acquire anything that makes sense. But we'll be going to be very careful about it. So 50-50 is the short answer to your question.
A two-part question as a follow-up to that, Mr. Sinha. How much is the debt currently, both short-term, long-term, on the books? And if you mentioned prudent GDV acquisition, is there something that you have zeroed in on currently in a particular geography? If you could share more on that.
No, so overall debt, we have roughly around 1,300 crore. So that's going to be which is short-term as well as long-term. And then we have a lot of projects lined up for investment, a combination of society redevelopment, given we have done some very marquee redevelopment projects, one in Mahalakshmi just last week, early this week announced, we've done in Lokhandwala. So we're getting a lot of inbounds for society redevelopment, but they don't require too much capital. But then we have joint development, which require a decent amount of capital. And then outright, especially in Pune and Bangalore, that required sufficient amount of capital. So we're going to be allocating funds based on the quality of the pipeline and the closure ratio that we see with these deals coming through.
Mr. Sinha, any plans in the future to monetize, the rental or the annuity income business? You do have Mahindra World City, Jaipur and Chennai. Would that be an avenue that you look at, either a REIT or an IPO for that particular arm?
Those assets are quite different from what the REIT profile looks for. See, REITs are more suitable for annuity income generating assets, and our IC businesses have mostly one-time lease premium. So it's like a sale. It doesn't generate a lot of rental income over the year. So they cannot be monetized the way a commercial real estate can be monetized. However, our monetization includes outright closure or sale of land assets in those locations. So we have brought 3 locations already to the market: World City Jaipur, World City Chennai, Origins Chennai, where Sumitomo had invested. But there are 2 other locations: Ahmedabad, Origins Ahmedabad, and Origins Pune, those are available for monetization. Our goal is to bring them to the market at the earliest.
Mr. Sinha, the other question, you just briefly alluded to the Mahalakshmi project. What is the GDV there? What is the timeline there? And so when will the project complete? When do you start revenue recognition? And last time you spoke to us, you told us about the second cross lane project in Lokhandwala in Andheri. So what is the update over there? Is that on track? We believe last time around you had told us that revenue potential of close to 550 crore.
Let me just, maybe I'll repeat that. So let me just cover the Mahalakshmi, then I'll cover the Lokhandwala. Mahalakshmi, the GDV is 1,650 crores. So it's a mid-sized project for us, but it's going to be a marquee project for us because this is our first project after a long time in, let's say, the premium neighborhood of South Bombay, around South Bombay, right? It's in a partnership with Livingstone Infra. So we're going to work very closely together to create a marquee product. The approval process is just starting because it's in a way society redevelopment kind of a project. So it will take another year to 15 months to get the project launched. And then from that point onwards, we put RERA date of 5 years, but typically we target 4 years for the project to complete, and where you realize all the PAT, etc. that you just mentioned. So that's the life cycle of Mahalakshmi project. The Lokhandwala project is 1,000 crores. It's slightly smaller, but it's a very nice location. Really excited about that. That project will also go through the society approval and PAAA agreement, etc. Which will take another year to 15 months. Then we'll launch, and then it will take another 5 years for it to complete. We'll try to do it sooner.
All right, Mr. Sinha, thank you so much for spending time joining us today. Wish you good luck for the rights issue and look forward to speaking more on this platform. That is the management there of Mahindra Lifespaces approving a fundraise through the rights issue process.